Coming up on Business Incorporated. Zambian inflation rate falls to 14-month low on food costs. And today we'll look at factors that shape sub-Saharan Africa's economy in 2021 and an outlook for 2022. As part of our year-end review series, we'll look at how a self-proclaimed Ugandan wastepreneur saw an opportunity to turn plastic waste into fashionable pieces. Hello, welcome to the program. I'm Ladi Williams. Let's kick off the show with market numbers. Starting off here in Africa, it's a short trading day for most markets we track here as the year draws to a close. Here in Nigeria, the NGX closed at noon with the index ending the year in the green. The GSE index was down 0.10%. Egypt's bourse ended the year of 2021 with total gains exceeding 115 billion Egyptian pounds to hit 765.5 billion Egyptian pounds during all year round transactions. EGX 30 benchmark index spiked 10.1% to stand at 11,949.18 points, while Kenya was down on Thursday. And stock markets in the Gulf ended 2021 higher, with the Abu Dhabi index exiting the year with a roar on its best annual performance in 16 years. The Abu Dhabi index added 0.45% on Thursday, the last trading day of 2021, its best year since 2005, with more than 68% gains. And Dubai's main index gained 0.69% to end the year 28.3% higher. Saudi Arabia's benchmark index added about 30% in 2021, logging its sixth consecutive yearly gain, driven by rising oil prices. The main index closed 0.73% up on Thursday, while the Qatari index was the only laggard. Today, it fell by 0.5%, but finished the year about 12% higher, its fourth straight yearly. And European indexes fell today in the last trading session of 2021. Well, my colleague in Berlin, Rob Watts, will talk about the final trading day of the year. We'll also discuss IKEA and the fact that the euro turns 20 this weekend. Great to have you, Rob. Well, another year of trading comes to an end. How are markets finishing 2021?
Well, markets here in Europe are ending the year under a veil of uncertainty, really. It's uncertainty over the Omicron variant of coronavirus. Of particular concern are the high numbers of COVID-19 cases that are being recorded in the United States and in the United Kingdom, which has posted record numbers in recent days. There were over 189,000 reported cases in the UK on Thursday, and that has taken its toll on London stocks, despite the FTSE hitting an almost two-year high earlier this week. Things have been a little bit better on this side of the English Channel, with stocks in Paris and Frankfurt climbing towards the end of the week. Concern over Omicron among traders does appear to have eased slightly. They're clinging to new data that suggests the variant carries a lower risk of hospitalization than the previously dominant Delta variant.
And a Swedish furniture giant, IKEA, has announced it's hiking its prices. Why?
Yes, the Scandinavian furniture chain, famous for its big blue warehouses, its meatballs and low prices, says it's increasing those prices by an average of 9% globally next year. Now, the company that operates most of IKEA's stores is blaming pandemic-fueled supply chain problems and raw material costs. It says the overall increased costs for supply and transportation show no sign of letting up, particularly in Europe and in the United States. So the company actually posted a 17% drop in annual profits last month. But now it says those increased costs do need to be passed on to the consumer. Now, this is just yet another symptom of the problems we've been seeing in many countries as economies bounce back from the depths of the pandemic. Demand from consumers has surged at a faster rate than suppliers, manufacturers and retailers can keep up with, and that's leading to high levels of price inflation.
And this weekend marks 20 years since the euro first went into circulation. What's the verdict on how the last two decades have gone?
Well, the fact that the euro has even managed to survive two very challenging decades has been seen as a success. I mean, during the time it's weathered the global financial crisis and, of course, the Greek debt crisis. Economists here in Europe also point to the success of the euro and the European Central Bank in helping member countries to weather both of those crises. So how would the poorer members of the currency union have survived if they had instead had to go it alone rather than being part of this group of 19 nations? The euro is also seen to have brought a level of stability to the continent of Europe. But now the Eurozone has another enormous challenge ahead of it as the European Central Bank seeks to help economies recover from the effects of the pandemic. And of course, in the next few years, the Euro family is set to expand with the likes of Bulgaria, Croatia, and Poland, all in the queue to join the Eurozone. So the next 2 decades could also be pretty eventful.
All right, that's Rob Watts right there in Berlin. Thank you so much, Rob. Well, moving on now, the final trading session is underway and stocks were lower in London in the morning. Let's bring in Juliana now. Great to have you, Juliana. Well, the FTSE 100 index dropped by about 33 points in the morning, away from the 22-month high seen on Wednesday. Is this final trading day for the year? Can the market toast to a strong year?
Oh God, that's a difficult question to answer, Laddie. I think, in short, we'll say we don't really know. I think the 7,500 points that the FTSE managed to retain earlier this week is a good thing. As you said, it's a 22-month high, and it's in vast, stark contrast to what we saw in the depths of the pandemic when it plunged almost 4,000 points, well below than some of its record highs that it's achieved before. But again, and I said this earlier this week, if you look at the kind of archaic 19th century style index we have here in the UK, it just doesn't compare to what we're seeing in Wall Street, where we know lots of the tech hubs, those unicorn companies, those trillion-dollar firms are keeping America riding high, where we just don't have that here in the UK. We had that Flopperoo listing of Deliveroo earlier this year, where their stock market value plunged on the opening day because a lot of people really are not too sure what happens with ride-hailing here in the UK, particularly after those Uber drivers won a major payout from the Supreme Court about their rights and their consumer rights. What does that mean for the gig economy? I think the Treasury and certainly those that work within the square mile were hoping that some of these successful ride-hailing apps here in the UK would put us on par at the very least with the stock list in New York, but that's just not happened. But I think to bow out of this really complicated, terrible year above 7,000 points is definitely something to cheer, well, at least for the investors if you've got your money in the right places.
Exactly, something to cheer there. Well, from lockdowns, pandemics to petrol panic, supply chain chaos, the last 12 months have been a bumpy ride. What is the general perception of investors in London about how things, went this year?
Yeah, it has been bumpy. I think obviously the biggest casualties have been the leisure and tourism related stocks, those who are more exposed to hospitality. IAG, the parent company owner of British Airways, their stock prices has been up and down. Also banks that weren't profitable this time last year, they have at least gained back some points. And that's mainly because, of course, we saw interest rates rising. So at least now for banks at the very least, borrowing costs just a little bit more than it was at the start of the pandemic. So things haven't necessarily been great. Again, I think there is lots of discussion now, really some crisis talks happening within the square mile because, of course, we lost our status as being the European financial hub to Amsterdam at the earlier in this year. That was a huge slap in the face, and lots of this had to do with Brexit. That withdrawal agreement that Boris Johnson signed at the last last minute before we were to officially leave the European Union, had no mention of the service sector and the financial service sector. So individual institutions have been having to carve out their own deals. Lots of people now have been moving from the capital into Frankfurt, into Amsterdam, into Paris, where they just find it more viable. So yes, we bow out on a high in terms of the actual individual figures, but there's still lots of food for thought into how the financial system in the United Kingdom will be able to evolve into 2022.
Right, and yeah, talking about 2022, what is the outlook like?
Oh gosh, yes. Should I bring my crystal ball from
Yes.
under the desk, the one that I don't have, laddie? Look, I think it's definitely going to be Omicron, certainly in the first 6 to 8 weeks. Of course, Parliament is on recess at the moment. Really controversially, Prime Minister Boris Johnson, who was literally backed to the corner, decided at the 11th hour not to put restrictions in place in England. I think he's likely going to regret that decision. We've seen record high cases, 189,000 positive cases yesterday. Lots of people, in fact millions, are likely to be celebrating New Year's Eve huddled in one sort of nightclub or another. We're expecting people to cross the borders from Wales and Scotland, where there are restrictions in place, into England. So we are likely going to see record numbers of over 200,000 people testing positive for COVID a day. We are expecting restrictions to be put in place imminently, perhaps even before Monday or Tuesday. This is going to cause lots of trouble from backbenchers for Prime Minister Boris Johnson. It's likely that there will be a leadership challenge in the first quarter of next year. Again, as well, inflation, that is crippling. That's really hurting households. We're hearing talks of a period of really stretching for lower income families here in the UK. So it's not great. So certainly, I think, at least in the first quarter of next year, politics, COVID, and political tussle is what we're going to be focusing on, I think.
Right. And we're going to be tracking all of that. All right, Juliana, thank you so much. And see you next year. And Happy New Year in advance.
Happy New Year, laddie. See you next year.
All right, moving on now. Hong Kong's stocks led gains among major Asia-Pacific markets today, with the Chinese tech stocks in the city soaring. Markets in Australia, Hong Kong, and Singapore closed early on Friday for the final trading day of the year. Elsewhere in Asia, markets in Japan and South Korea were closed on Friday. The Hang Seng Index in Hong Kong jumped 1.24% to 23,397 points, bearing some losses, but still tumbling about 14% for the year. Mainland Chinese stocks were higher, with the Shanghai Composite up 0.36%, while the Shenzhen component rose fractionally. Elsewhere, the S&P ASX 200 in Australia slipped 0.92% to close at 7,444 points. The MSCI's broadest index of Asia-Pacific shares gained 0.43%. And U.S. stock futures were mildly lower in early trade on Friday ahead of the final trading day of 2021. Futures tied to the Dow Jones Industrial Average dipped 0.09%, while S&P 500 futures edged 0.11% lower. The NASDAQ 100 futures fell 0.08%. All three of the major averages faded into the close in regular trading on Thursday after trading slightly higher throughout the rest of the session. The Dow shed about 90 points to snap a six-day win streak. S&P 500 dipped 0.3%, falling less than 1% from its record, which it hit in the previous session. And the Nasdaq Composite lost 0.2%. Jobless claims for last week came in lower than expected, 198,000. The Labor Department reported on Thursday. Economists surveyed by Dow Jones had projected 205,000. There's no economic data expected going forward. We'll take a break now. We'll get more stories on the African continent. That's in a moment. Do stay with us. Welcome back. You're still watching Business Incorporated live from Channels HQ. Well, Zambia's inflation rate fell to a 14-month low in December, tempered by food price growth. Consumer prices dropped to 16.4% from a year earlier, compared with 19.3% in November, which is the lowest level since October 2020. The drop in the rate was driven by food price growth that slowed to a 13-month low of 19.9% in December, compared with 25.4% in the prior month. and non-food inflation decelerating to 12.1% from 12.2% in November. Costs rose 0.6% in the month. Sustained slowdown in inflation will likely see the central bank, which targets price growth within a range of 6 to 8%, keep the benchmark interest rate unchanged when its Monetary Policy Committee meets in February 2022. And that's to allow the MPC time to assess the impact a 50 basis point hike in November and a stronger currency will have in curbing inflation and offsetting rising fuel costs. An International Monetary Fund had projected a 3.7% growth rate for sub-Saharan Africa in 2021, a marked improvement on the 6.4% contraction of 2020, but still lower than many other areas of the world. Let's look at factors that shaped sub-Saharan Africa's economy in 2021 and the outlook for 2022. We have Trinity Nkube, an economist in South Africa, joining us now. Great to have you on the program.
Good afternoon. Thank you for having me again.
Yeah, so the IMF in its last World Economic Outlook noted inequality as a major concern in global economy recovery from COVID-19 this year. And this they blamed on stockpiling and export restrictions put in place by advanced economies and major vaccine-producing countries. What for you shaped sub-Saharan Africa's economy in 2021?
Well, what's happening is just a manifestation of what's been happening across the years. We have an over-reliance on the advanced economy, so there's no surprises there. It's just more pronounced when it comes to our export markets. When we export all the primary products, if you look at the three countries, for example, Nigeria, South Africa, and Ghana, each one of these is exporting either oil, gold, cocoa, and any of the primary products which are not value added. There is a need for beneficiation, which could create jobs in Africa. So we're not surprised there. And mind you, looking at the US itself, it's also struggling with supply chain issues in terms of the stuff that they get from China and so forth. So they are also suffering from inflation and so forth. So these are some of the issues that we have had to deal with in terms of Africa. That's why all these major African economies have also suffered quite severely over the past 2 years.
Quite. And how would you assess the responses of African governments to the COVID-19 pandemic and the vaccine issues this year? You know, let's look at countries like South Africa, Nigeria, and Ghana.
Well, they've done quite well in terms of testing. I mean, we've got great scientists in Africa. But again, following up on what we just spoke about in the first question, what we're having is we should be creating our own vaccines at some level, because if, again, we keep on relying on others to make these things for us, it's going to be quite a problem for us as seen, because before the Europeans and the Americans can send any vaccines to us, they're first going to take care of their own. So again, the over-reliance on the West should really stop. I think we have the capacity in which we can make our own things.
Well, that'd be great to see Africa creating its own vaccine. But would you judge, sub-Saharan Africa as resilient?
Yeah, we're a resilient bunch. We after all that has happened to Africa, I wouldn't go into much detail in terms of how much as wealth has gone out of Africa. But yes, we are resilient, but we could do better. I think there's great potential for us to harness, the human capital. We have a lot of potential. We have a very educated young population. About 70% of Africa's population, I think, is below the age of 25. So we should be able to harness this, have entrepreneurial drive in Africa, and make our own things and be competitive, globally competitive. I mean, there's no excuse for a country such as Nigeria to not be in the top 10 in Africa, in the world, in fact, in terms of competitiveness. So goes for Ghana, so goes for South Africa. So until we get to that point, we can have our resilience and we can actually lead and not survive, but actually thrive when it comes to global competitiveness.
Not survive, but thrive. Well, going into 2022, what is your outlook and what do you hope to see in terms of policies towards the fight against COVID-19?
Well, that's a great question. So I'm looking at the numbers and I see Ghana is actually quite, is looking great. They have about 5% growth that's expected for next year. And then we look at Nigeria and South Africa, which is around 3% growth for next year. That's very encouraging. And what we would like to see in terms of going forward is just to have, African people have more confidence in their governments. And that's a two-way street. So we would like to see more initiatives being taken on the health front and being able to incorporate and use the Africans more in every initiative instead of waiting for outside help in terms of foreign direct investment. We would like to see some private, domestic investments going into each and every economy. And there's the potential, as I said, and we just need the political willingness. And Nigeria is going into elections, South Africa soon. And these are some of the worries that I have when it comes to the fiscal policies that do come, with elections. We're already battling inflation and so forth. So, yeah, let's see how it goes. But we would like to see ordinary people being more involved in the economy.
All right, we'll see how it goes. Trinity Nkube, right there, economist in South Africa. Thank you so much for coming on the program, and Happy New Year in advance.
Happy New Year to you too. Thank you.
All right. Now we look at this year-end review series, looking at self-proclaimed Ugandan wastepreneur, Faith, worker saw an opportunity to turn plastic waste into fashionable pieces. She began collecting bits of discarded waste and turning them into durable and sustainable handbags. The bag sells for between $16 and $25 online to customers in Germany, the US, Holland, and others. You take a listen.
Kampala, Uganda's capital, churns out 1,000 tons of garbage per day, according to the East African country's National Environment Management Authority, NEMA. Most of it ends up as littering the city, clogging vital sewage and drainage systems, causing floods and creating unfavorable sanitation conditions. But what many see as trash was viewed as a solution-based business opportunity by entrepreneur Faith Aweko. Aweko and her employees turn plastic waste from sites like the well-known Katizi landfill site into fashionable handbags.
I like to call myself a wastepreneur because I deal in waste. And this is something that most people don't want to associate with waste, plastics, dump sites, garbage. And yet, this is something that is providing employment to women who are collecting the waste, to women who are sorting, to women who are washing, and also women who are processing and making the beautiful bags that Reform Africa is making. And then we are also able to provide an income for ourselves and the other employees. And I'm also championing in saving the environment.
Aweko and her Reform Africa team regularly collect, wash, and hang out discarded plastic bags from Kampala's dump sites. She says the jobs and positive effect on the environment she is creating more than make up for all the hard work and criticism she sometimes encounters. Once the bags are clean and dry, Aweko uses what she calls a heat presser to flatten and fuse them together. The pieces are then cut into patterns and stitched together to create colorful bags and accessories. Aweko currently employs 8 women whom she hired and trained from the surrounding community. Part of her vision for the Reform Africa project is to encourage more Ugandans to recycle and help people learn new income-generating skills.
I am very happy with this job because it has transformed my life very much. It has created a living for me and my child. I am now also able to assist my spouse when he is struggling. This job has really helped me. The other thing is, I like that we empty communities of these polythene bags, which saves the environment.
Aweko is a graduate of the Social Innovation Academy, seen outside of Kampala, which helps young aspiring social entrepreneurs take their ideas to market. Aweko's bag sells for between $16 and $25. She has deals with several local shops and markets, heavily using social media platforms to land more clients in the West.
And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Happy New Year.